So if you thought January markets were going to be calm and orderly, today has other plans. The US dollar just snapped a 4-day rally, not because of inflation, not because of earnings, but because of federal prosecutors opening a criminal investigation into the Fed Chair Jerome Powell, putting the Fed's independence under the spotlight. And when the word criminal investigation and central bank independence appear in the same sentence, markets don't exactly respond with a deep, relaxing breath. So here's the big question for today. Are we trading economics today or trading credibility? So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning and welcome. My name is Francois. I'm your market analyst here at ATFX Africa, and this is your daily market brief. Today, we're breaking down the euro, dollar, silver, and the Nasdaq 100. We're going to start with fundamentals first, then move over to technicals. And we're going to add just enough humor to keep the mood from turning into a full-blown, market group therapy session. Let's kick things off with currencies. Euro USD is getting pulled between two storylines. Number one, a softer US dollar driven by policy uncertainty and rate cut expectations. Number two, a euro that is under pressure as inflation in the euro area eases and the policy outlook is reassessed. On the US side, the dollar index slipped to around 98.9, ending a 4-day rally after news that federal prosecutors opened a criminal investigation on Fed Chair Jerome Powell. Powell has described the threats and charges as pretexts aimed at pressuring the Fed to align policies with the government administration's preferences and warned it could undermine the Fed's ability to set rates based on economic conditions rather than political influence. The dollar also faced downward pressure from wagers on additional Fed rate cuts after Friday's non-farm payroll data showed jobs growth below forecast for December. On the euro side, we have a very clear monetary policy contrast forming. The euro depreciated to $1.163, its weakest level since the 9th of December. Euro area inflation pressure are easing. Headline inflation slowed to 2% in December, back at the ECB's target. Core inflation also eased to 2.3%, slightly below expectation. Meanwhile, the US jobs report delivered on Friday gave us a bunch of mixed signals. Non-farm payroll rose 50,000 new jobs created, which was below the 60,000 expected figure. Unemployment also fell to 4.4%, which also came in below forecast. So, in essence, the market is looking at that and basically saying jobs growth was soft, but unemployment fell. So the labor market isn't exactly collapsing, which reinforces the idea that the Fed is unlikely to cut in January, even if the conversation around cuts later in this year remains alive. One more factor in our data for today worth noting is geopolitics is still a background driver, with intensifying protest in Iran and elevated uncertainty in South America. Looking at the charts, the technical picture for Euro USD is very specific and is giving a nice, clear roadmap. Euro USD is trading around 1.1658, with near-term resistance levels sitting just above that 1.167 level, which is capping potential upside at the moment. Momentum indicators are heavy, The stochastic is around 25, which is near oversold levels. On the downside, near-term support is sitting around 1.162, followed by 1.15 flat. So traders, in essence, the question for today is, if the euro is near oversold levels, do we see a bounce attempt, or does the downward trend keep pressing as long as the trend and resistance holds? We'll just have to wait and see. Well, moving over to commodities. So let's talk about the metal that showed up to Monday like it drank 3 espressos: silver. Silver jumped more than 4% to above $83 per ounce, hitting fresh record highs as two themes drove demand. Number one, bets on US interest rate cuts, and number two, geopolitical tension boosting safe haven demand. Investors are closely monitoring nationwide protests in Iran, now in their third week, reportedly resulting in hundreds of deaths. The US president warned Iran's leadership against using force on demonstrators and signaled that Washington could take action if Tehran violently suppresses protest. While Iranian officials called against US or Israeli intervention, so in essence, silver is reacting to a classic safe haven setup. Geopolitical stress is rising. Markets are leaning towards 2 Fed rate cuts this year. And even though the Fed is widely expected to hold policies later this month, and with the dollar softer on Fed independence concerns, that all adds another tailwind to the precious metal sentiment. Looking at the charts, silver rose to $84.03 an ounce and is currently trading around $83.35 an ounce, which is up around 4.1% on the day. It's up almost 30% over the past month and up a whopping 180% over the past year. So, looking at key levels, silver is pushing hard into that $84 resistance zone, attempting to break through. The stochastics, however, is currently showing overbought conditions, which means momentum is slightly fading. And this could mean that we could see some pullbacks or consolidation in the immediate future, which wouldn't be abnormal. So the question for today with this specific commodity is, when markets hit record highs on geopolitical and rate cut expectations, as traders, do we treat it like a breakout story or a volatility story? That being said, let's turn our attention to equities, more specifically the Nasdaq 100, which is showcasing a backdrop this week that is busy week energy. US stock futures edged lower as investors braced for a heavy slate of corporate earnings and key economic data that could shape Fed expectations. Additionally, we also saw the Dow and S&P, which was down 0.4% on Friday, and the Nasdaq was down around 0.6%. Looking at this week's calendar, major US banks are reporting this week, including JP Morgan Chase, Bank of America, Wells Fargo, Citigroup, Morgan Stanley, and Goldman Sachs. Also, Bank of New York Mellon, Delta Airlines, BlackRock, and PNC Financial. So markets will closely be watching all of these, including Tuesday's inflation report, with any upside surprise potentially complicating the Fed's rate cut trajectory. And the bigger uncertainty layer remains: Fed independent concerns and geopolitical risk, including Iran's tension and continued uncertainty linked to US intervention in South America. So in essence, Nasdaq traders are balancing so much this week. There are earnings signals, inflation signals, and political and institutional risk signals. That's not a 3-factor model. That's a full-blown choose your own adventure book. Looking at the chart, US 100 is trading around 25,590, down around 0.8% on the day. Over the last 4 weeks, it is up, however, around 2.2%, and over the past 12 months, it's up around 23%. So the technical framing for this specific index is as follows. Nasdaq is still holding up on a broader bias, but the near-term tone is being tested by risk sensitivity into CPI and earnings. Near-term support is sitting around 25,500, followed by 25,200. Resistance is sitting overhead at around 25,850. So ask yourself, if inflation surprises on Tuesday, does tech react like a calm adult or like a toddler who missed a nap? So as we are heading into today's session, here is what you need to keep an eye on. First up, US inflation data tomorrow, and whether this is strengthening the dollar or complicates the market's rate cut expectations. Then earnings season kicking off with major banks giving insight into borrowing, deal making, and trading activity. And then in the background, whether the Fed's independence story continues to weigh on the dollar and broader risk sentiment. Because today might be the headline shock, but tomorrow is when markets decide whether it's just noise or the start of a new theme. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to atfx.com and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.